Morning traders, this is TOS right here. I'm going to show you how to do the levels from the GEX levels and the volatility ranges, or aka expected move levels for TOS, how to put them in your chart, how to update them, how to read them, what tickers are on, etc. So you have a chart of Google pulled up. So all we need to do, we just go to the room, wherever these are. These are going to end up being on the dashboard. But for right now, at least this week, I'm going to be dropping them in the room here. So you just go to the level and to the file, and you click open the file. And then I like to download it. You can copy and paste these here, but what's going to happen is it's going to copy some other stuff besides just the levels. If you wanted to, you could drag and copy them this way. I like to just download them. And I click on that file and it'll pop up like this. Then I can just Control A to select all, Control C to copy them, or you can go into the edit menu and do it that way. All right, then we'll go back to the charts, go to studies. This is the way I like to do it. There may be a better way, I don't know, but go to edit studies and then I'll just create a new one. So this one is volatility ranges. So Steamroom, volatility ranges. Just delete this and then you just paste the levels. Then you can look through here. You can just scroll through real quick, make sure there's nothing highlighted red. So you see, like if I do this, it'll highlight that saying there's some kind of problem with the code. So as long as there's no red, just click OK. It'll save it and add it to your chart. And here's volatility ranges. So this is what they're going to look like. This will give us an idea of where the market is priced in, the expected move. Basically, we won't get into the details here, but whenever you look at the options premium and how they calculate the one standard deviation move, that's what these 1 sigma levels are. And you go into the study and look at it. So we have the alerts on. By default, we can turn those off. I'm going to leave them on. We turn the bubbles off because I have these formatted so that we don't need the bubbles on. So we'll see the dotted line is the 2 sigma. So 2 sigma down and 2 sigma up. And then the dashed lines are the 1 sigma up and down. So that's where the probability 68 point whatever chance that we're going to close within these lines right here. Now I have these levels calculated for everything that I have GEX levels calculated for, except for the VIX. I don't see a need for that right now. But we can look at the GEX levels. I do have the GEX levels on VIX. So I'm going to do the same thing here, just download the levels. Control A to copy, to select all, Control C to copy, and then we'll go back here, studies, edit studies, and I'll create another one for this one. So this one, Steamroom GEX levels. Control A to select this, and then Control V just to paste right on top of it. Levels look fine. I don't see any red there. And I'm going to turn off the volatility ranges just so we don't have too much stuff on the chart. And here's our GEX levels. So I'll turn these bubbles off too. I actually have an issue I discovered on these levels, but I'm going to fix these for the next day. But you'll see major pause 1 is a solid green line. That's actually the call wall. So the solid green is the call wall. The dashed is going to be the major positive. Dashed major negative, and then solid red is the put wall. And then we have the volatility trigger as the yellow one. I'm going to turn these bubbles off. And we'll look at some of these charts. I haven't really watched VIX very much on the GEX level, so I'm not too sure how well they work or anything. It'll be interesting to see going forward how well these levels hold or how they react to the levels, because we've already seen, you know, based on the setups and stuff that we've created, that the equities act differently at the levels, react differently than futures do, and indexes. So they all act a little bit differently, and VIX I expect to act differently as well. We're going to look at some of the equities. I like those levels. So the you know, so again, we got the call wall that we expect that to be, you know, to first act as resistance, and then it tends to act as a magnet. And of course, that has a little bit to do with the way everybody, you know, different people trade. They have different perceptions of the market. They look for different types of setups and stuff like that. But we generally have seen that, regardless of what the theory is, what we've seen in practice, how the prices react at these levels, we get pretty good, consistent, repeatable reactions. So they're nice to trade. So right now we're holding above the 0 gamma line, and so we're in a positive gamma environment on Google. And you know, this is our volatility trigger. So this is the area that we're looking for reactions. We want to be able to stay above this area. As we get below this, we expect to see continued selling. You know, the theory is with market makers that once we get below that 0 gamma line, it's not a tick below, it's not, you know, 10 ticks below or whatever, it's somewhere below this point, start to see more and more negative gamma, and we'll actually see volatility increase. Because below 0 gamma, if dealers, and again, this is theory, and he's making a bunch of assumptions and everything, but as we get below the 0 gamma, dealers will actually have to sell as the market goes lower. They accentuate the market move. As the market goes higher, they have to buy. They have to buy more to be delta hedged. Spencer did a great skill share, talked about this. So we're above 0 gamma. We would expect to see lower volatility, and the market is going to be selling these levels more. That's the theory anyway. That's not the point of this video, but we'll look at some more of these levels. So Apple, I mean, we can see, like I said, it doesn't matter what the theory is, what people say. We know what the reactions are. We see that. We see the reactions every day when we watch the GEX ray. These levels work, and work very well. The way that we trade them. I'm not going to sit here and be like, well, GEX is $2 billion, so that means that they're going to have to. I don't care about that. All I care is what happens, and trade it, and hopefully it happens again. But the levels are very nice. Very nice. Let's see. What we'll do is look at ES here. So I want to show, I've got the Mag 7 on the sigma levels and the volatility, and the GEX levels. But I want to show on the futures too. I'm not sure what people trade on TOS, what symbol, but I think most people just trade the continuous contract, which is nice because you don't have to worry about the roll and all that kind of stuff. But so I've got the GEX levels on the continuous contract for ES. And ES, by the way, is actually calculated off the SPX levels. Let's see. Was that a 4-hour chart? Yeah, I just zoomed in more. So what I do is I take these levels every day and calculate the ratio adjustment. I use a ratio adjustment from a service actually. And so from the SPX levels, I ratio adjust those for ES. So whenever we're watching ES, we're watching SPX, gamma, and GEX. The ES options are not very pretty, and I don't think very useful from looking at them. So we have SPX, the cash, and then we have ES, the continuous contract, and then we also have SPY, which is calculated off SPY options. So the SPY levels are going to be different. And like I said, in the room, we know this, that they react differently too. So it's good to watch where are the ES levels, if you're trading ES, where are the SPY levels, if you're trading ES. The same if you're trading SPY, where are the ES levels, right? So, and then the same on NQ. So we have the continuous contract, and we also have the cash as well, and the continuous is calculated off of the cash. And then we have the ETF, QQQ. Now on Russell, we have the cash, but I do not have R2Y because I don't have a ratio adjustment for R2Y. So we have the cash RUT, and we have, which is what I'd be watching if I was trading Russell. And then we have the ETF QQQ as well. Let's see, so to go through the other tickers, let's see, we have ES, SPX, SPY, NQ, NDX, QQQ, RUT, and IWM. And then we have Apple, Microsoft, Meta, like where that's at, Tesla, NVIDIA, I think I already said Google, and I added Broadcom as well. Very interesting levels on this. So one of the things that I like to look at with these is I like to look at the daily, and I was just looking at ES this morning, for example. You know, that's a pretty big area. And then, you know, we can look at the GEX rate throughout the day to kind of get an idea how these levels are shifting and what they might look like the next day. So it's a good thing to watch. Another thing I want to mention, that'll be the end of this video. If you look at Broadcom, let's see, let's go to 30-minute. So you can see we have a call wall here. This is actually the call wall, if you remember, because I had those, I had the lines backwards. I'll fix that for the next day. So we have a call wall here. We have another major positive. Then we have the put wall, and then we have zero gamma. So generally we expect to see zero gamma above the put wall. But I want to show, just so people can visualize this a little better, what this looks like. So I'll move this off the screen just so I can make these levels a little more like the chart here. All right, so if we look, it's still, let's see, don't do that. Come on, man, killing me. All right, killing me, man. Let's just do this. That's easier. Now we're talking. All right, so see this orange line here, this is GEX by open interest. This orange line here is matching up with the zero gamma. And then this red line, that's this put wall right here. So this calculated, this is the strike with the most negative gamma on it. Sometimes you're going to see that above zero gamma. You know, we don't have a whole lot of negative gamma below this line. That's why we have the zero gamma line up so high. So that's information, right? It's not that the chart is bad. That's the data that we have. And then here's the strongest, the most positive strike, which is going to be our call wall right here. And then you'll see this one. This is this level right here. This is the second most positive strike. Actually, this is a call wall. Remember, I had these lines wrong. So this is a call wall up here. And then this is the major one, you know, lines up with here, because that's the second strongest strike. And then the put wall, because that's the strongest negative, and then zero gamma. So that's why we sometimes see zero gamma below the put wall, is because there's just a lot of negative gamma here. Something to keep in mind. So if you're going to update these, all you would have to do is you just go in the next day that we get these levels. You just do the same thing. You go to the dashboard where this is going to live at. Grab these levels. Control A to select all, Control C to copy, and then we just go into the existing study. I think I did the GEX levels, and then we're just gonna, actually you don't even have to do that. All you have to do is go into here and edit sources. So I think that was a GEX level. So you just go into your existing indicator, edit sources, and you would just copy the new ones in there, and you're ready to go for the next day. So it's pretty simple, just one step. You get all the GEX levels for all the tickers. And then the volatility ranges, you do it again for the volatility ranges. And then you can go in there, once you've done that, you can go in there and then add that to another chart, and now you have those levels on there. So we can change this to where it doesn't fit all studies. So it doesn't do that, but so now I have the GEX levels on this chart too. So that's it. It's pretty simple. You know, we're going to add a bunch of tickers in the future, but right now we're just getting the main ones up that people watch. But if there's any special requests for something, you just let me know. You know, I can add it for the next day. We can put it on there. And if anybody sees any bugs, issues with it, or suggestions on how to make it better, color coding or any of that kind of stuff, just let me know and be happy to look at it if it's something that helps everybody. So I appreciate it, guys. If y'all have any comments or anything, just DM me or holler at me in the